Hi guys, this is Mark Shawson, the Pattern Trader. So many times in trading, just like in a poker game, I suppose, it really comes down to knowing when to hold them and when to fold them. And what I really mean is beginning in August, I started to strongly suggest to our members to start getting long the British pound versus New Zealand dollar when it was trading in the mid 180s, around 186. Currently, British pound versus New Zealand dollar is trading at 202, about 1,700 pips higher than when I started entering this trade on the long side. Now, in more recent weeks, the British pound versus New Zealand dollar maxed out at about 205 and has been going sideways to lower. In fact, it's gone about 500 pips lower from when it maxed out at 205 to 2,000 right now. It's trading around 201 and a half as we talk. I will go to the live charts in a moment, show you what I'm talking about. But this has been one of those moments where for 6 weeks it looks like pound New Zealand's doing nothing, or it's plummeting 300 pips and then going up 200 pips the next day and leaving us wonder where the next move is. And normal traders are getting in and out of moves for 30 pips, 50 pips. So certainly a 300 pip retracement, 500 pip retracement looks enormous. Certainly if you're trading on a 5-minute chart, a 15-minute chart, or even a 1-hour chart, it looks like a carnival ride at Magic Mountain. But if you step back and look at the weekly charts, you'll see that all it's been doing is consolidating at multi-year highs. And so I've been encouraging our members not to panic and just stick with their positions. And then if they were slightly nervous, there's a hedging technique that I employ, and I'll talk a little bit more about that in a moment. But it's all about keeping it in perspective. So even though we've had these 300 pip gyrations every other day, I've been holding my positions. I'm fully relaxed because I think I understand the long-term trajectory of this pair. Now, this is very different than what most currency traders do, where they look at a short-term chart, 15-minute chart, hour chart, what have you. And frankly, just like any other trading instrument, anything can go anywhere in the next 15 minutes or the next several hours. But by understanding the long-term cadence, the long-term patterns, it puts you in sync so that you don't have to panic. And alternative, most people think they're being a good boy by just sticking in a 10 pip or 15 pip stop loss, that they're observing good money management rules, they're being disciplined, they're placing their stop loss. But it's my contention that you can die a death of 1,000 paper cuts. Meaning if you take enough 10 or 15 pip stops, eventually they all add up and then you slowly hemorrhage or bleed to death. Whereas frankly on the pound New Zealand dollar, and I hate to publicize it, I don't even have a stop loss on my long positions. Now these things, come up and down 300 pips and sounds reckless and what have you, and it looked pretty scary last week where pound New Zealand started crashing lower and pound Australian started crashing lower. And I just advise our members to keep their cool because I think that the long term suggests that we're going higher here. And right on schedule, right on cue, today we turned around. Pound New Zealand went from under 2,000 to over 201 and a half. And pound Australian is now trading back on multi-year highs, just like that. So most people are just so used to being in and out and losing perspective. And so I'm going to now go to the live charts, show you what I'm looking at, show you what I have been looking at, and why I've been sticking to the long side, and why I encourage you to do so. So just hang out a minute, and I'm going to go to live charts. Okay, so now I'm going to discuss this knowing when to hold them and knowing when to hold them concept on the live charts. But before I get to the live charts, I just want to share with you a couple of emails that I've sent out to our members around the world beginning in 2017. This was March 2017, some 2.5 years ago, when I was observing the weekly chart of the pound versus New Zealand dollar. I'll go to the live chart of pound New Zealand dollar in just a moment. And you can see that I was making certain bullish recommendations all the way back then based on a double bottom price pattern and key reversal price actions. And at that time, 2.5 years ago, I said I believe that prices can only head much higher from current level based on those chart patterns. And at the time, you can see pound New Zealand was 175. Today, it's about 201 and a half, some 2,600 pips higher than when I predicted. Now, this was during the David Cameron administration. Then we had Theresa May. Now we've got Boris Johnson. We had 1,000 things on Brexit happening between then and now. But at that time, I was confident that we were looking at a massive turnaround opportunity, and that's exactly what we've seen. So this is a great example of how markets are ahead of events. Now, in more recent times, in early August, here you can see August, I started looking at a double bottom price pattern and started to advise our members to strongly get on the long side in the mid 186 level, in this case at 186.72, based on a double bottom on the daily price patterns, as well as a key reversal. And then I started recommending adding to those positions on this coil. You can see that I recommended adding right there, and then adding one more time at the 193. At the time, I advised that there was going to be a lot of volatility, but that I said I was looking to accumulate long positions, place very wide stops, so not to be prematurely jerked out. Now, this is, again, the key thing of knowing when to hold them, knowing when to fold them. I did say at that time there could be a lot of volatility between 190 and 193. And that's exactly what happened when I entered at 193 here. It did go back to 190, 300 pips. But guess what? I was not jerked out by that, and I'm still sitting in that trade now that's trading at 201, some 900 pips higher. Now I'm looking at the live real-time chart of pound versus New Zealand dollar on a weekly chart. Now you can see for the past 6 weeks, we've just been coiling at the upper end of these multi-year highs at around the 205 level. You can see about 6 weeks ago, we peaked out once again at the 205 level, and then we went 500 pips lower. Now, this looks pretty scary if you're looking at on a 15-minute chart. In fact, I'll show you. Again, this is the difference. If you're looking at a 15-minute chart, this looks pretty terrifying here. It looks like this thing is really peaked out, ready to go lower, and I certainly would be panicking if I was looking at this on a short-term chart. But you can see very shortly thereafter, we're back up again. So very difficult to form a perspective when you're looking at this on a short-term chart. If I was looking at this, I wouldn't know heads or tails about the direction of this currency pair or anything else for that matter. But when we step back and we look at it on the long-term chart, we can make certain observations about what this has been doing historically, and this is why I don't panic when the market is either going sideways or a little bit lower, because if we keep this in perspective, you can see that for the last 2.5 years since I predicted this up market, we've gone from 165 to 201, some 3,600 pips higher in this stealth bull market. Now, what I look for are patterns that give me the comfort of staying in a trade for the long term. And what I see here, the long-term patterns are guided by this double bottom back in late 2016, early 2017. It looks just like a W letter formation. And then we formed this rounding bottom. This was the common neckline. The resistance area was the neckline at 180, which recently became new support. And then we double bottomed again at about the 182. I saw that very early in August, alerted our members. And now all we're doing is trading in and around this neckline, biding this time. And to my mind, the longer this consolidates at this area, the bigger the launch, the more the suppression of energy when it does uncoil. It will uncoil, I'm confident, to the upside. And again, this is how I stay in these trades. So notwithstanding the fact that we've had a 500 pip reversal, for most people this is unsustainable, I am still in these trades. And so again, it doesn't work if you decide I'm going to put a 10 pip stop or a 50 pip stop or even a 150 pip stop. You would have still been stopped out. But if you keep in perspective of what's going on here and keep your lot sizes lower, then you can withstand it. Now, as I've shared with our members, if you want to sleep at night while it's still working its way through here, if you're long, let's say you're long 3 lots, either normal lots or mini lots, then I would go a partial or full amount, where you sell an equivalent number, or let's say 75% of your position, because I think this is eventually going to break to the upside. So if you want to manage your position, you can sell a smaller amount or an equivalent size, wait for this thing to come, and then when it starts coming off, you can just get rid of your shorts and let the longs work again. Alternatively, if this thing came lower, again, you could dump your shorts and let the longs work out. And this is what I've done at certain times. I have not done it here because I'm still confident that we will work ourselves to the upside, and we can see the first day of the new trading week that we've already established that we have dug in again at this 2,000 level. And again, I'm confident that we're going to break to the upside. This is a graphic of the positions that I took in my own trading account. Now, this was taken a little while ago when pound New Zealand was a little higher. So instead of being up about $1 million, I'm up about 750,000. But you can see I started getting in along with our members when that one email at 186.72 and started to add to my long positions in pound New Zealand. You can see many times I had no stop loss or take profit because I'm so confident that this is going to go higher that I didn't want to limit the upside potential on this trade. You can see at some points when it did get to about the 2,000 area, I did put a hedge against my open trades. I put a sell order, made about $200,000, and then when it started going back up, I had the double slingshot of making money on the downside and then making money as it relaunched itself higher. So again, some trades you just need to stick with, and others you need to get out very fast. And what I try and do is assist our members in distinguishing the two strategies. All right, guys, I hope you got a ton of value out of this video. If you would like to sign up to our 21 power strategies, we'll put a link alongside this video, and I wish you a healthy and prosperous trading day.